You good now? You good now? All right. All right, y'all. All right, everybody. I apologize. I'm having technical difficulties over here. I don't know why, but I don't know what's going on with OBS. It's not for some reason it's disconnecting and connecting to YouTube. So, but until then, I'm gonna just go ahead and just do my thing. I'm gonna redo my whole intro. So, welcome, y'all. This is your boy Jay Bar. Welcome back to episode 4 of my D.N.T series, Diary of a New Trader series. And today I'm just going to be doing straight market analysis. And it's just going to be giving my take on like what I think is going to happen going into this week. I didn't trade last week because of the holiday, and also because it was Trump's inauguration. So um, a lot of volatility was injected into the market that day. The market reacted very positively to Trump's inauguration. So we had a bit of a rally last week. I just sat back on the sidelines and watched that. I didn't feel comfortable trading going into that week, so I just sat back and took it off. That's what you got to do sometimes. Especially like if you don't want to force anything, right? So there we go. Here's Forex Factory. Here's the news calendar. We have a few not volatile. We have a few red folder news events or high impact news events going into this week. Nothing really going on Monday. Nothing really going on Tuesday except in the U.S. except consumer confidence. If you're an Australian dollar trader, if you pay attention to gold, this may interest you right here at 7:30. Gold tends to move up. Gold and silver and the metals, they tend to move a lot during the Asian session. So you can find some good moves on gold and other metals in the Asian session. Going into Wednesday, this is the key one right here, the federal funds rate and the FOMC press conference. This is the key one right here, right? Especially with the rally that we've had going into so far in January, the first month of the year. As far as this goes right here, depending on if they reduce interest rates, which most likely they're either going to reduce them or they're going to remain the same. Either way, and for anybody who doesn't know what the federal funds rate is, this is basically this is the interest rate that the banks borrow their money from the central exchange, right? So the bank wants to get a loan for say $10 million from the central exchange. They're gonna have to pay 4.5% interest on that money, right? So over time, depending on how many years they have to pay the loan back and all of that, they're gonna end up paying 4.5% interest on it. So, my bad. So, going into that, normally, if the interest rates increase, there's strength in the U.S. dollar because more dollars are in circulation, and so it's just like the supply and demand thing of the more supply you have of something, usually that means there's less demand for it. Whereas the more demand you have of something, that means that eventually the supply is going to run out. But with the U.S. dollar, it's kind of like reversed in a sense. So the more dollars that you put in circulation from like borrowing, that kind of like leads to higher inflation, and that actually devalues the dollar. So that's why you see when interest rates are really low, that's why you see like the dollar falling off, and you usually see things like stocks and like the housing market like just increasing in value because there's more cash in circulation. But yeah, so for anybody that's new and coming into this, it can be a bit confusing. I'm not exactly 100% on it myself. There's still a few things I can learn about that, but that's basically the gist of it. It's like um, when people are spending money, that's good for the economy, but it's kind of bad for the U.S. dollar because those dollars have less value because there's so much of it in circulation from the from the debt. So yeah, feel free to research that on your own. Let's see. Make sure my stream is doing good. Stream bit rate. I guess. It say good right now. All right, I'm gonna leave it alone. I ain't gonna mess with it. All right, but that's Wednesday. Also, there's crude oil inventory. So for anybody who's like an oil trader or natural gas trader, you have that to look forward to on Wednesday. Thursday, January 30th, we have unemployment claims, GDP. Let's see, and then Friday we have employment cost index and core price index. So got pretty volatile, pretty some high impact news events going into basically after Monday, right? So now we're gonna go ahead and get into the charts. So right here, I did want to show the U.S. dollar currently. So currently, right now, from a monthly perspective, we're inside of a CV of sell side inefficiency, buy side imbalance. So currently, right now, this fair value gap right here from a monthly perspective is currently being respected right now. However, with the premium discount range right here, so we also have taken out an external range high earlier. So this is liquidity right here. So the next area of interest after we see like a key area of interest get taken out. In this case, this external range right here, all the way back in October of 2023. So from 2 years ago, basically, from nearly 2 years ago. So now the next area of interest we look at is the next inefficiency after this liquidity has been taken, right? So currently, as it stands, that'll be this right here, and so go ahead and mark this as internal range liquidity. We're gonna mark this as monthly. Oh shit! Hold on, caps lock monthly. Boom. So I'm gonna do that. Then control, click and drag, and boom, there we go. Right. So this is the next point of interest that we want to be looking at right here. And this internal range liquidity is also the same thing as a fair value gap. I just mark it this way. But for anybody who likes using fair value gaps, it's the same thing. It's the same thing. You can either use it, mark it as a fair value gap, or I just look at it as internal range liquidity, because a fair value gap is also a form of liquidity because you have a low. In this case, you have a low and a high that's right here. So inside of this imbalance, there's liquidity. There's going to be liquidity above this high right here. So, yeah. And in this case right here, you have a high and then a low, right? So below this low, there's going to be liquidity, right? From a monthly perspective, if I go down to a lower time frame, you're going to see more candles at that same low, right? So if I go down to a daily, right here, you see that single low right there? There's liquidity right there, right? And inside of here, right? And even inside of here, you have a little order block right there. But so right here, what I have marked on the US dollar currently is this is that whole monthly range right here that y'all saw earlier. So I go back to the monthly perspective right here, from this low to this high. That's a range. That's a dealing range right here. So because we've taken out this high, this external range back in October 2023, next area of interest we look to is right here inside of this internal range and inside of this dealing range. Here sets the 50% area of that range. So if we see any type of retracement, it'll most likely be at least to 50%, right? At least to 50% before we see any type of rally back higher, right? But this is just for right now. This is just speculation. I'm not saying that that's going to happen, because anything can happen at this point. Say some unexpected news comes out, say another country goes to war or something like that, then that can rattle the market up a lot. So, but just from what I see right now in the price action, right? This is the next key area of interest that I'm looking at right here, paying attention to. And if the dollar does start selling off and then coming down into this area right here. So right here's the premium and right here's the discount area of the range, of the dealing range, right? So the idea is that in this area, in this highlighted area right here, the premium, right? Normally institutions and hedge funds, they don't normally want to buy in these areas because everything is still in a premium, so everything is still kind of expensive. So it makes more sense for them to buy when things are in an area of discount, right? So just for example, like right here at $107.50 or whatever, right? It wouldn't make sense to, you could buy here, but you'll be spending more money to buy here but you'll be spending more money to buy here versus if you come down to about, let's say $104. Now instead of paying 107, you're paying 104. You can make way more money on this move up, right? So that's kind of the idea of these dealing ranges, right? With the premium and the discount, it makes more sense to buy in the discount when things are at a discount versus when things are in a premium, because you can make way more money, especially like if you're a seller, or if you're not a seller, but if you're an interested buyer, and it makes more sense for you, even as a regular consumer, like say myself or anybody else. As a regular consumer, it makes more sense for you to want to buy when things are at a discount, right? Versus when things are at a premium, right? Because you're spending more money for the same thing, but instead, like now it's costing you a bit more money, and you could take that money and put it towards something else. So, but yeah, if I see any type of retracement back lower into this area, I'm going to be thinking that everything else that's inversely correlated to the dollar, so that's stocks, crypto, metals, if the dollar is heading lower, then I'm anticipating everything else to be bullish, right? I'd have some type of like bullish narrative going forward. So that's my quick analysis on the US dollar, right? Now I'm gonna go ahead and go to the ES, and NQ and the YM, basically in the indexes. So currently right now as it stands, I already have Sunday opening price marked up right here. Currently as it stands, where I think it makes the most sense for price to go right now is take out this external range high, right? So take out the high back in December, right? Well, for the ES, for NQ, yeah. So take out this external range right here. And the reason why is because what I see forming right here from a weekly perspective, I see a weekly fair value gap about to form, right? So potentially on Sunday, not Sunday, well, when we open up Sunday and going into Monday, that Monday's range, what I'm expecting to happen is I'm expecting there to be a slight retracement down lower, right? Or a slight open to the downside. And then that creates that low. And then next we have that large expansion move higher and taking out this high right here, right? So basically what I'm looking at is kind of something like this right here happening. Boom. Not saying it's gonna come all the way down here and anything like that. Like it can just straight open up and then just take off from here. But try to give the best example of what I think can happen. Right, got that, and then I'm gonna draw like a little wick. I'm gonna draw like a little wick right here. And all right, that didn't work. Hold on. Kind of draw like a little wick, like, and it won't let me draw a damn wick. Oh well, y'all get what I'm trying to say. You get what I'm. You get what I'm. Yeah, y'all get what I'm trying to do. Huh. But yeah, that's basically the gist of it. Just thinking that there's going to be some type of movement higher. Right, we have a retracement down Sunday, open up lower Sunday, going into Monday, between Monday and Sunday's range, and then eventually find some type of like ground of support area, and then basically going into this week with all the other high impact news drivers, like say on Wednesday, they do decide to lower interest rates. Well, for companies and corporations, that means that they're gonna want to be borrowing money, right? Because now interest rates are lower, so now they can basically borrow money for cheaper, right? And that in turn is what's gonna cause the U.S. dollar to actually fall off, right? So, with that idea going forward, I'm thinking that if I go down to a lower time frame, so from a weekly perspective, I'm anticipating open lower, support area somewhere, and we take off and take out this external range high. So go down to a daily, right? You see, we do have a few key areas of interest. I'm gonna get rid of this because it's kind of distracting me a bit. But we do have a few key areas of interest. So we have this fair value gap right here, or this internal range. You can call it whatever you want. In this case, I'm gonna just mark it a fair value gap. Just mark it a fair value gap. So boom, we have this fair value gap right here. And we also have another little fair value gap right here. But to line this up with the other charts, yep. So same thing for the NQ with the ES. Have a fair value gap here, right? Fair value gap. Oh shit, hold on. My fault. Fair value gap here, fair value gap here. There's a little bit of a volume imbalance right here, so I'm gonna go ahead and just push this gap all the way up to right there. So we got, actually no, that's not a volume imbalance. Got that. So we got a fair value gap right here, and then also have another fair value gap, a smaller fair value gap right here. Right. So depending on whichever one of these areas of interest gets tagged first, right? Because I don't need all of them to be tagged based off of a strategy. I'm basically looking for SMT to occur, so the smart money technique. So I'm looking for a divergence or a break in the correlation of these assets. And currently right now, as it stands, NQ has tagged that same fair value gap that's on the ES. So NQ has tagged it, meanwhile ES hasn't, and I don't think that the YM has tagged it yet either. All right, so let's see. Fair value gap, boom. Fair value gap, boom. Yeah, nope. It hasn't tagged it either. Right? So right now, as it just going into it right now, it looks like on NQ we might have S&T. However, I'm gonna sit back and wait to see what Sunday's opening and Monday's opening looks like. So I want to see what that Monday opening range looks like, right? So I'm gonna sit on the sidelines until like Monday night, because usually I enter in the Asian session because of my style of trading. I like to swing and hold. Going into like, I like to enter and find like a entry pattern that night, and then just hold the expansion move going into, just hold during the consolidation and then the expansion into going into London's opening, and then going into the New York Open, and then I look to close basically towards the end of the edge of the New York session, so around like 3 o'clock or so. However much of the move that I have, all right, I'm cool with that, right? So if I get a large chunk of the move early in the week, based off of that, good to go. And then I usually just sit and rest the rest of the week. So that's kind of like how I had to adapt my strategy to futures prop firms, because not a lot of futures prop firms, not a lot of them favor swing traders. But when I'm swinging, I'm cool with, I want to at least be in by Monday night going into Tuesday morning, and then be out, say, by usually Thursday. I'll hold a trade going into Friday, but usually Usually I want to see my take profit hit by Thursday evening or so, or Thursday morning going into Thursday. However, if I see, say for instance right here, I'm looking to go long, right? So say Monday and Tuesday we're down here, and then we finally see an expansion move higher. At any point after Wednesday, I don't want to see any type of retracement back to Sunday's opening price, right? Because I'm using this area to gauge how much of an expansion move we should have going forward into the week. Because say Monday and Tuesday, we spend most of our time here. If we're really gonna hit this area or take out this liquidity, we basically only have Wednesday, Thursday, and Friday to do it. So we only have 3 days left to do it. So if Monday and Tuesday we're kind of right here, and Tuesday we see a rally higher, that means that if we're really gonna take out this area, that means we have exactly 3 days for it to happen. So Wednesday I need to see expansion, Thursday I need to see expansion, and Friday I need to see expansion. If I see expansion Wednesday and then a consolidation Thursday, well, then that kind of leaves me between a rock and a hard place, because it's kind of like, okay, we only have Friday for this range to expand all the way here, right? Unless there's some type of high impact news event Friday, say like an NFP or something, then that may be the catalyst to push this, go ahead and expand higher. However, this week I didn't see that. However, this week we don't have NFP. NFP is the following week, because this is the last week in January. So just based off of this right here, that's what I'm anticipating, and that's why I like that, and that's why I utilize Sunday's opening price. That's something that I learned from ICT's concepts, using Sunday's opening price in the short term market strategy. So so we have that going forward. As far as right now, we only have S&T on the NQ. So I'm gonna just be sitting back and waiting to see what happens. I personally think that with this S&T right here, we go ahead and see a rally higher. If I go down to the 4 hour, see if I see any type of like entry criteria. I'm going to mark this fair value gap right here too. I'll mark this back. Let's see. Let's go down to the 4 hour. See if we see any type of like entry criteria. As you guys can see, that's that same daily fair value gap right here. NQ we've taken out a low. NQ we slightly taken out a low, so we had a liquidity run here on NQ. I want to say this is the candle. No, this is the candle. This candle right here is the one that created that S&T. So this is short-term low. Here, meanwhile, we have on the NQ for the ES, we have 4 hour. We have, I bet I didn't click it. Tag of an internal range on the 4 hour. But it's a fair value gap right there. We haven't tagged this low at all. All right, so the same fair value gap, it got taken out by the NQ. All right, so we have several different divergences going on right here. So we have high taken out here. So what they both took out that high right there, so I'm not paying attention to that. So yeah, based off of what we do on Sunday's opening price, so basically I'm looking at this low right here, right? This is the low that I'm paying attention to for ES, because NQ has already taken out the low, so there's an S&T there. Meanwhile, I want to see what this opening range does, right? So yeah, I'd like to see what that does. So don't really have any particular setup right now. It's kind of just a thing, like I said, I'm just gonna wait and see what happens going into Monday night. But today's video was just a brief analysis of the current price action. And probably what I end up doing is Monday night I end up streaming again Monday night and looking to enter find a type of like entry going into Monday night's Asian session. So um there we go. Little short stream here. Let me go to YouTube really quick. See if I honestly hope to God, I hope to God this stream is okay, because I'm gonna be mad if I did all this and then my stream is funky. But all right, y'all. That's all I have for today. Currently, that's my current price action analysis right now. I'm gonna do another live stream later on. Most likely tomorrow night after I get off work and everything, I'm doing another live stream, and we're basically gonna be looking for entries or looking to see if like we have any SMT anywhere, and looking to see just based off of Monday's range if we're gonna expand higher and take out that external range high, right? Back in December of 2024. So, which asset I'm gonna trade, that remains to be seen. Most likely, I may favor the ES, because right now the ES hasn't taken out that low back in this week actually, this past week actually, from the 23rd. ES hasn't taken out that low yet, so ES may be the one that has that higher, that forms that higher low, right? So that would indicate that there's some type of bullish sponsorship inside of the ES, and we have an expansion range higher, a distribution higher, and take out that high. So yep. So tomorrow I will update y'all, and we're just gonna be searching for entries tomorrow. So with that being said, thank y'all for tuning in, and I'll see y'all in the next one. Peace out.